Hour in the studio by Al Fullerton from Aliom Financial Markets. And if you have any questions for Al, for our expert, about what's happening on the market today, you can give us a call. I'm pleased to say we've got phone lines open today. Give us a call, 1300 30 34 35, for any questions about the market or anything in the news today. Aliom Financial Markets, Al, is this a key week for us? We know that our market's been holding up a bit better than Wall Street. We've got that US earnings season coming up. Could this be a turning point for our market?
Oh, look, I think it will be a key week in certain aspects. We've got to remember it's still school holidays. There are a lot of portfolio managers still still down at Threadbow. So we must remember that the volumes will be light. People are obviously in anticipation of the US reporting season, earnings season coming out, which kicks off tonight or tomorrow morning our time. And at the end of the week we have obviously Chinese GDP, which comes out on Thursday, as well as US retail sales. So again, it's quite a data-heavy week. So I think we'll take some direction from that. We're going to have to wait for the earnings reports from the US as well, and a few pieces of Aussie data thrown in that week. So it's going to be another week to really watch it, whether it's going to be a trader's market or whether it's going to be an opportunity to really buy in.
Yeah, Lucinda Chan.
Other possible options there for Sigma. I've heard that there may be some diversion of assets, some asset sales there, maybe trying to streamline their business a little bit more. Are there any other potential buyers out there in the market globally?
Hard to say, Al, at this point in time. I mean, Sigma's business has been very, very difficult, and particularly the downgrades they've had recently on the back of the generic businesses. They've certainly been under the microscope by a lot of companies looking at the performance of the company, and that doesn't help them. And I think also the competition and aggressive discounting that has gone through in those businesses over the period has been a negative for the group as a whole. But you are right, they probably have to have a look at some of the opportunities in their asset sales, perhaps as a potential to help them out in this situation. And also perhaps maybe even looking to the generics business, perhaps to sell a part of that to help them get out of the position they're in. Either way, they're in a tough spot and they'll have to find a solution somehow.
Lucinda Chan, great of you to join us. Thank you. Appreciate your time. Al Fullerton, I guess this is part of a broader theme, though. It's about merger and acquisition activity, but particularly that interest that's coming to our shores from these global companies.
That's exactly right, and we've seen that at the beginning of last week when we saw interest in Centennial. We saw some information coming in from Harvey Norman. We've seen CSR as another prime example, and I think what we're seeing here is one that offshore companies are viewing Australian assets, or Australian companies, as being relatively fair value and a good opportunity to get in there. And the second thing I think we're seeing is some companies actually looking to perhaps streamline their business slightly more, maybe offload some assets which don't sort of fit the model that the business wants to see going forward.
Although it's been interesting watching the prices when you've had that interest from offshore. For example, Sigma, they liked it at about 60 cents, and then they dropped a bid. Again, we had that Bright Food looking at China. You know, they had the higher offer, and then there was talk that it'd bring the lower offer. But then, of course, we had Wilmer International come through. But it just seems that the market's still nervous enough that you just can't get those really good prices.
No, you're exactly right. It's finding that exactly the right amount to go in there, not to overpay, not to underpay. But Bampu came in with that offer for Centennial Coal at 40% premium, which is very aggressive in terms of they're obviously very bullish on the coal sector and the New South Wales economy there. So look, I think that we really are seeing definite signs of interest that perhaps there is the opportunity to buy these stocks at a very attractive level. But you're right, finding out that the correct price is obviously essential.
And just speaking of the coal sector, what's your sense of how much that scrapped RSPT and the new minerals resource rent tax changed things for the sector in terms of opening the gates for M&A?
Oh, look, it hasn't, and it was that alleviation of risk that we spoke about, a couple of weeks ago. Actually, was the day that the Gillard made the announcement, and it was that alleviation of risk that cloud that had hung over the sector for so long was removed, and that just gave a lot of people a little bit more security in the resource sector as a whole.
Another big story today, Al. I know you're watching as well. Dulux probably more interested in Orica because of the links to the mining industry. Al Fullerton from Aliom. Would you prefer to have the exposure to the, I guess you could say, the household sector in some ways through the Dulux Group, or would you prefer that mining kind of exposure through Orica?
I love that exposure that you do get with these type of companies. Orica with the explosive side of the business, they're good exposure to coal. Someone like an IPL is another example, which gives you a good exposure to more of a leveraged exposure, I think you'll find, to the mining sector rather than a single stock, single resource exposure that you'll find. So in terms of that side, I like that slightly hedged risk position position that you're not taking so much direction from a single stock price, but across the board. And so I do like the story. And as we mentioned before, I like the fact that they've diverged that part of the business. They've offloaded that Dulux side of the business, which maybe didn't really fit with the core themes of the business.
Again, coming back to what you were saying, CSR, going back to the building side of things, you've had, the movement with Sigma and Boral as well. Did we mention Boral before?
There's an endless list of these companies who really are paring back, offloading these assets, and I think that's because they're now looking forward. Where are we going to be? The next 6 months is going to be vital for these companies, and they have to actually sit there and go, what is our core business focus? And certainly we're seeing that coming out time and time again.
Is that kind of soul searching coming out of the GFC?
I think a lot of soul searching as well, and I think these guys have realised what worked, what didn't work, what their business. A lot of these people have squeezed margins, they might have reduced headcounts, and now they have to say what is going to be the most profitable angle for our business, because it's still an uncertain 6-12 months ahead of us. We're by no means out of all this, the negative data and these global economic issues. And so what they're looking at is how we best go forward, what's our best business model, and what shouldn't be part of that needs to be offloaded. And
all of what you're saying can be applied completely to the US as well, with the earnings season coming up this week.
It can indeed, yes. No, there certainly are those synergies there with the US.
Okay, let's mention another. But Al, was this kind of a bit unexpected, firstly?
Oh, yes and no. I think it was Zumiez is a company, it's a US retailer that's come in and they've made an offer to beat the Billabong price of $1.30 per share. They haven't named what the actual price of that will be, but it certainly was going to beat Billabong's bid there. And I think it is a bit of a shame. I quite like those synergies there, because I think that West 49, the Canadian economy is really one of the outstanding Northern Hemisphere developed markets. They were the first to increase rates. They've been sort of somewhat tainted by the US economic downturn, and somewhat quite unfairly their unemployment rate is dropping month after month, and so I think it would have been a great exposure for Billabong to have to that US market.
But again, if you're looking at
Canadian market, I'll correct myself there.
No, I'm with you. Yep. In terms of, you're looking at the retail space though, and yes, Canada's economy's done very well, but they've still got the situation of rising interest rates like we do, don't they? Isn't that kind of a bit of a question mark area at this point in time?
Well, that's very true, but I think at the same time we have to think that it's actually showing that their economy is coming out of this GFC, that people are spending and that people are actually feeling slightly more, the consumer investor sentiment is slightly better. And so I think that perhaps it will be a rising rate environment. How quickly that will happen, but it's really pointing at the sign that the economic recovery is there. Unemployment rate is falling. Unemployment rate is falling. People are spending more. They have job security, and that flows down to the retail sector. Yeah, and another reminder of what's such a patchy economic recovery. You can look at Canada and Australia and or Asia Pacific basically, and you're looking at performance vastly better than what we're seeing in the United States and Europe. Just on China, because we've had some trade numbers out over the weekend from China. I guess it's a plus for sentiment to be seeing some of these export figures so strong. Is that enough to calm some of the market fears? Because fears about China has been such a big part of the market's movement in the last month or so. No, look, it has been. As you said, the last month has been all about China, and there's been very positive and negative reactions in terms of the data flow coming through there. Look, one thing that this export data that came through over the weekend may do is put some pressure on the yuan, relaxation, perhaps, being sped up somewhat to counteract this. It is showing that the growth was about 44% was the figure. It does show that obviously there is still some demand globally, but we spoke about this last week, that the European demand, which is their biggest export partner, is slowing. So there might be a natural cooling of this demand, because the demand out of their biggest trading partner, is just not there. I suppose our concern or our interest is whether it affects China's monetary policy and whether they start to see more of a slowdown in that economy. Well, that's right, and look, they haven't actually acted on that yet, and on any sort of fiscal tightening, and they've relied on this natural cooling. And now we're seeing GDP coming out this Thursday. Now Q1 obviously was up about 12% mark, far too high. There was no way they were going to keep their inflation in that 3% band that they wanted for the full year. So what we're looking at now is 9, 10, around that sort of level, I believe, and it'll show that there is this actual contracting of the economic growth in China, but at the same time they haven't had to enter into any sort of tightening policy. So it's a watch this space with China there.
Al Fullerton's from Aliom Financial Markets. It's great to have you in the studio. Actually, we've got you for a bit longer, I think, right through the hour.
That's right.
Good to have Al with us here in studio for trading.